Good evening and welcome to the Australian Stock Market Show. We do hope you've had a great week so far and are staying safe. Nelson Mandela is quoted as saying, "Education is the most powerful weapon that you will use to change the world." Tonight, our aim is to educate and inform you so that you can change your world, as you'll better understand the stock market and how to profit from it. We'll also answer your questions as we bring you our upfront, no BS approach to all things stock market. Our main topic for tonight is best ASX stocks to buy under $5, great opportunities to invest. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. How are you doing?
Me, I'm really good tonight.
Yeah?
Very good tonight.
That's great. I'm glad you're not tired.
No, I've been having a few little sleep-ins where I don't even set the alarm and that. You know, I actually slept in last Friday. I got over about 8:45 in the morning.
Wow.
Like, I don't do that. And people were ringing me up, like staff were ringing me up and saying, you get up at 6 and 6. I go, yeah, but I was that tired.
So is that the best thing that happened to you this week?
No.
What is the best thing that happened to you this week?
Well, I went out on the weekend with my wife and we went for a nice ride on our motorbikes and everything else. That was really nice.
We're going to hear about that every week now?
No, but you just asked me what the best thing was, so I just gave you said the best thing. It won't be next week.
Like I said, when I hear that you've done some sort of amazing stunt, then I want to hear about it. Like the time that you fell over at the traffic light.
Oh, that was really good. Yeah, no, I'm not going to tell everybody about that.
Okay.
But no, it's fun. I mean, basically what I've been doing lately is I've been doing some more research on the Dunning-Kruger effect, actually.
Oh,
so
really?
I might bring it to everybody soon.
I think they'd really be interested in hearing about that one.
So stay tuned for that. But anyway, before we get into our first segment for tonight, again, we'll take some live calls on the show. If you want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone and call us now. And the number you need to call is 03 for Melbourne 9290 9988. That's 0392 909988. And to get things started, the first person to call the show right now will get a free copy of my latest book. Now, I know Janine and I are super keen to chat to you, so pick up your phone and get dialing now.
While we wait for you to call, it is the third Tuesday in the month, and this means we take a look at international stock markets. So let's get into the charts.
All right, on your screen right now is the monthly watch list of all the international markets. Well, not all of them, but the major international markets. And as we can see at the top there, India's at the top.
Yes, look, amazing, isn't it? It's 4.46%.
I don't think I've seen India up the top.
But only just leading the Dow Jones Industrial Average up 4.18%, the Nasdaq 100 Index up 4.16%. So it's all about America then at the moment.
That's really surprising at the moment. I mean, they've entered reporting season.
The banks are probably helping that a little bit over there.
Well, so yeah, first week of reporting season in the US is generally always financial. So the banks like your JP Morgans, your Wells Fargos, Bank of America, all of that reported last week. And all of them were on top, either exceeded their expectations on them or just blew them away completely.
Look, I know the index for that sector went up, but it didn't go up as much as I expected.
Yeah, well, that's what I was about to say.
It's interesting, isn't it?
There was, to me, it's interesting how they report figures, because they always report the figures that make them look the best.
Yeah.
But they're all different. If you start reading all the reports and go, oh, well, we got more revenue, and the other one goes, well, we made more profit, and the other one goes, well, we know this is better. So you think
that they're targeting it so that
I
they look
reckon there's
different?
stuff they're not telling us, and I don't think they're as good as what they actually are.
So watch out for the next quarter is what you're saying.
I think watch out for the next quarter. So come on.
Okay. All right, so Nasdaq Composite up almost 4%. Yep. Then we've got Asia, the Hang Seng Index 3.4%. Yep. Straits Times Industrial Index up 2.82, so Singapore's doing well. Haven't they are they still in lockdown at the moment?
Yeah.
They come out of that?
Yes and no, they come in and out of it. I mean, they're about 80-something% vaxxed, so they're pretty good.
The European Index 2.7% up. And then we've got the CAC 40 Index up 2.35%. The FTSE's an interesting one, up 1.66% this month. What do you make of the FTSE? I mean, it's really strange, isn't it? We'll perhaps have a look at the chart.
Well, we can have a look at the chart later, because it seems to me like you've got America rising quite well. Things are going okay.
Australia's been rising reasonably well. We've gone through that prior all-time high nicely. But what's happening
in the
with
longer term,
Asia and the FTSE?
Yeah, Asia's been on a little bit of a different cycle at the moment than the US. So I'd be interested to have a look at the chart of the FTSE.
Okay.
But also want to look at the Chinese market because there's a lot of talk around, Evergrande and China melting down and all sorts of other stuff.
Okay.
So I do want to look at that as well.
The DAX up 1.4%. Now the All Ords is up 0.8% at the moment. The ASX 200 up 0.67%. The Shanghai Comp Index is flat.
Yep.
What do you make of that?
Well, that's interesting. You got the Hang Seng up 3.39, but the Shanghai Comp flat, and then that could be the Evergrande factor. But when we go and have a look at the charts, we'll actually see.
And Tokyo's down 0.5%. The Nikkei is actually down 1.45%, and New Zealand, that surprised me.
Yeah, but I mean, we're talking about half a month here, so we're halfway through the month. That's what it is. Obviously, we'd rather look at the figures on a bit of a longer term basis than that.
So should we have a quick look at the year?
But we don't need to go through it. We'll just have a quick look and see what's going on for the year. And India's up the top, and India did so well last year too.
Yeah, and the S&P 500's up there nicely at almost 20%.
Yep.
We come down a bit further. We're looking at Australia up 12.25, which is a nice figure for it. And then we've got the Asian markets down here with the FTSE.
Yeah, most of the Asian
around
markets
11%,
aren't doing well.
12%. The Nikkei 5.26, and the Shanghai Comp only 2.67% for the year.
So let's go and have a look at a couple of charts.
Oh, there we go. Look, Hang Seng Index is actually down 6.
I know. That's what I'm saying is it's a tale of two things. You've got the US and Europe, and then you've got Asia. It's completely different.
It's chalk and cheese. So let's go and have a look first at the S&P 500.
Yep.
I actually had a look at where the market was. It's around a 200% growth in the US market since March 2000. So that high around
in the last 20 years.
In the what was it, March? I think it was. All the way up until the recent high we've seen, which is quite amazing to see the market had done that. Now, I thought what would be really good is just to have a quick look at what the market did from the peak prior to the 87 crash, so we can see that quite dramatic fall that occurred down here. And I'm just trying to, you'll have to be my eyes and tell me if I'm on there. All the way up to the high. And where's the high there?
Left. We got it. There you go.
There.
So it was much more bullish.
Yeah, so following that correction, we saw 360% gain in the US market to that high in 2000. So the question is, have we run our race yet in the US? Maybe not.
I think we'd be getting close. I think we'll be getting close over the next couple of years. Now, let's have a quick look at that Hong Kong market or the Shanghai
So we'll have a look at some of the Asian markets now, like you said. And, I mean, we were looking similar in terms of the way we were unfolding with these rises and falls after the GFC. It's this sort of rhythmic pattern that was happening on our market. But then we broke out of the blocks, went through the all-time high, and we've managed to stay up there, which is nice. But look what's happened here. This looks really quite bearish at the moment, and there's a real risk that this market, if after it has a bit of a test of the recent fall, we'll know whether it's going to decline further or not, because a push back up here, if we see a further move down, then this low could be taken out if that was the case.
Correct.
There's a lot of toppiness across here.
Cool.
Is there anything else you want to talk at for now?
No, I just want to have a quick look at the Asian markets because really, as I said, there's a lot of news around about Evergrande and people are worried about it. I know we've had questions from people saying, if Evergrande collapses and the government doesn't support it in China, we're going to melt down. And I don't think that's true. It's not going to happen.
Okay. That is all from us on the overseas stock markets. Now it's time we get into our first email for the night.
All right, our first email is from Kavish, who says, "Hi, Dale and Janine. I had brought a few units of Ansell when it dropped in August. Now, prior to this, I didn't have any knowledge to do with analysis, and I bought it assuming I'm getting it at a bargain price. Now, today it dropped down to its 52-week low, which it was its previous support a year ago. Do you think it will make a new resistance at the current price? And what would you suggest at this time either to hold, and where should be my ideal stop loss, seeing it's already dropped around 9% from my purchase price?" Big thank you to both of you for educating us continuously. Thanks, Kavish. Interesting. So
good question. Interesting stock, very volatile at times. So before we get into answering his question, can we just have a look at the environment or what sort of personality this stock has and has had over time? it can be quite volatile. Look at what it had done through this period in the 90s.
Ansell is
Yeah, all the
volatile.
way. It was just really struggling to get through this. Will we see repeated the same thing where Ansell will struggle to get through these highs, given the degree of the fall? I'd say that's a possibility. Given it's taken out this low now, that's a real concern.
Well, it is. He bought in at the wrong time. He bought in on a drop before he knew about analysis, which he openly said, which is fine.
I think it's awesome that it's admirable that he's actually come out and said that that's the case. Yeah.
And I think that's great. He's actually said that. He's realised that that was a mistake. Right now he's in a stock that's falling, and what I'm looking at, it's probably going to fall further. So he was at a 9% loss when he sent us that email. I don't know how many days ago was that, but I'm assuming he's furthered that. So basically, mate, I would just set a stop loss at 15% below my buy price, and then I would exit from that point of view. That's what we teach you in my book. So just do that. Anything else you want to say?
Yeah, I'll just have a quick look at the chart here. I mean, it's going to be a while before you get a trend line or anything where you could say that it was actually going to stop. So I just tried to estimate where he might have bought in.
Yep.
So it was a bit like catching the falling knife. And I think the one thing that I will say is if you're ever unsure about the direction of a share and you're thinking about buying it, you may not have a lot of knowledge, but you can go onto your broker's website and look for the longest time frame chart that you can possibly bring up. Don't bring up daily charts, look for weekly or monthly charts, and then have a look at what the direction of the stock is before you actually go into it. That's a simple
And if you're not sure,
check.
print the chart up, give it to a kid and they'll tell you. It's
Really?
pretty. Yeah, well, they can show you trends. They know what that is.
So it'd be the son or the daughter saying, Dad, Mum, don't buy this one, it's going down.
All right, we're going to go to a caller. We've got Brian on the line, have we? Brian, are you there?
Yes, hello. How are you guys?
Fantastic. Where are you from, Brian?
Adelaide.
Oh, fantastic. Our first Adelaide caller. Well done, the people in Adelaide. So get all your friends together, have a few beers and watch the show. That's what I reckon you should be doing. What's the stock you've got for us today?
Bisalloy. It's code BIS.
BIS. And do you own that stock, Brian?
I did. I bought it at $1.70 about 5 weeks ago.
Yep.
It started going down, so I sold it.
Okay.
It was just... I broke even pretty much.
Okay.
Just wondering what your thoughts are on it.
Why did you buy it 5 weeks ago? What was the reasoning?
I
Sorry, I just missed that. Sorry, you just cut out.
like the company. I know the company.
Oh, okay, you know the company, so you've done a bit of research on it.
Yes.
Okay, let's have a look at it. I think Janine's got it up right now. What do you want?
This looks really stunning, actually, Brian. From a long-term perspective, we've just seen this stock come off long-term lows by the look of it, find a lot of support, and then it's just rocketing up here. It is a low liquid share. If we go and have a look at the volume that's traded, you can perhaps check that for me to see what comes up. But when it's peaked, the volume's only around 1 million shares a week there, isn't it, I think, there?
Yeah, some of that it's around about that.
And it drops right down. It becomes extremely illiquid some weeks. So, look, that's a real concern for it in terms of being able to get in and out of it at a price that's reasonable. Now, it looks like if he bought it around $1.70 some weeks ago, he might have got spooked by the fact that it wasn't going anywhere. And some of these small shares, you have to really be prepared to let them trade in a reasonable range. Now, a 10% fall or somewhere in that order is nothing. Often stocks will pull back 10 or 15% before you even get the exit setup occurred. You just got to be prepared for that. But now it's taken off again, so it's really tough when you're first learning and you're trying to make a judgment about, whether it is to stay in or not, and then the stock just ramps up after you get out of it.
Well, it is, and this is sort of one of those classic sort of examples. Now he's had a look at it. He knows the company. Now, we didn't get into how much he knows about the company, because often we get people that work in mines, they go and buy, they hear things around the mine about the mine, and then they go and buy the shares for it. This could be a similar type of thing here, but often because people don't have a rules to get into and solid strategies to get in, they often panic and get out quickly too if it starts to go against them because they don't have rules.
Well, there's some of the things in your book would have helped him even.
A lot of things, absolutely, a lot of
in
things.
looking at this, because the trend was still strongly up on the weekly. It hadn't changed at all.
No, it hasn't, and I think there's no reason to exit that stock. So to me, in my mind, there was no reason to exit. So, but anyway, mate, Brian, you're going to get a copy of this book anyway. So I think our team will give you a call tomorrow and get your address or to send it out to them. But have a good read. It'll give you some much better rules about getting into stocks and protect protecting your portfolio and obviously in how to get out of the stocks at the right time. But I think now's the time we've finished on this stock, have we?
Yeah, look, I think it's great that you're actually giving him that leg up in giving him the
Well, he was nice enough to call in and break the barrier
get it
today.
started. Look, our next email is from Andrew. Hi, Janine and Dale. I own shares in Appen, which are currently 42% down. Bought before I knew about stop losses. On today's podcast, however, you seemed buoyant about its future, which cheered me up. Can you share why you feel this way, please, Andrew? Okay, I'll leave it to you.
Oh, to me, it was all it was is the more a stock goes down, the more excited I get, and especially a really good stock like Appen. And that's all it was. It was just like the lower it gets. If you don't own a stock, the lower the price it gets, and you know it's a great long-term company, the more excited Janine and I get. It just happens to be like that. And the more this thing falls away, the more excited, as I said, the more I watch it more closely. But eventually it's going to stop falling and start to rise, and that's really what it's about. If I own the stock and it's falling away, I'm going to get more and more depressed.
Well, can we have it?
We can have a look at it.
Quick look,
yeah.
just quickly.
Yeah.
We just
because we
before
only
we
briefly
go,
chatted about it, didn't we?
we did. Look, it's only just come off the bottom, so it's only 2 weeks up, which is not any sort of reason to be buying a share off a low. You need to wait for a bit more confirmation and support off that bottom to just confirm that it's not a sucker's rally.
Correct.
All right.
Correct.
Looks like we have another caller, which is exciting. Raj, are you on the line, and where are you from, please?
I'm from Perth.
Oh, wow, someone from Perth. How fantastic. I think Perth is absolutely gorgeous. And don't make us jealous about the weather at the moment, because we've had all sorts of weather here in Melbourne recently.
Yeah.
All the lockdowns.
Yeah. We just would like to know what your question is for tonight, please.
Yeah, my question is about the stock Hello World. The code is HLO.
Yes. Okay.
I bought that $2.15 a few weeks back. And just for short term, like 3 months period with the reopening theme, just want to check what's the future of that, like short term.
Okay. Fantastic.
Yeah.
So you're trading short term. That's generally what you do, is it?
Yeah.
Okay. Look, I can remember when some people came to us years ago when they were first learning with us, and they were telling us they were trading really short term, and some of them were trading on daily charts. And we said, look, go and apply the rules to the weekly chart and then tell us whether you make more money on the weekly chart or trading really short term. And you will never guess what their answer was, will you? Or can you guess already? They made more money trading on weekly charts than really short term on daily charts, which is what a lot of people do, unfortunately. So perhaps you might like to test some of the rules on a bigger time frame.
Cool. All right.
Yeah,
so-
just
Go ahead, Raj.
yeah. For that one, like with the opening, so maybe that stock will benefit me with,
Yeah,
Okay,
yeah.
Raj. Great.
Okay. So
Good
let's go.
suggestion.
So now we know a little bit about why you bought it. So let's go and have a look at Hello World, yeah?
Excellent. Look, it's had a great run off that low recently, incredible run. And this is where trading really short term can sometimes be, it can be a challenge for people to actually stay in the stock long enough to be able to
Yeah.
get the money out of the share.
So he's bought in at a great time though, hasn't he?
Yeah, he's bought. Oh, actually, I just changed the chart. That made it look different, didn't it? So then you can see that, it's just moving up and it's stepping back. It's moving up and it's stepping back. And that's what you want to see. So we've now got a potential level where it may slow down from that point, but if it rips through there, then this stock could go, $4.40, $4.60. Yeah, I agree. So we just watch now, but a nice trend line might eventually be able to be applied under that as it's rising up.
Yeah.
But you may need something with much tighter, a tool that's got a much tighter stop capability than a trend line even.
Yeah, I'm a little bit on mine. He entered the green line is where he entered, so he would have entered on that week, which is the week of the 3rd of September, because he said it about 4 or 5 weeks ago.
Okay, that may have been a trend line entry.
Do
Do you think you'd get one down there?
Maybe, I'm not sure, but I think it might have been a little bit too early, because you didn't know it stopped falling at that point of doing. That's my only concern. He probably jumped in a bit too early, I think. But hey, great trader at the moment, making a lot of money, so that's well done. Thank you very much for giving us a call. And if you want to call into the show, remember it's 9290 9988. We'd love to hear from you. Our next email is from Stuart, and he says, "Hi, Dale and Janine. Love your work, learning a lot. Holder of VUL at $6.50. What are your thoughts? Cheers, Stuart." So VUL,
All right.
Stuart.
Yeah, look, I haven't even bothered to show the monthly chart at this point, just because we may as well just go to the weekly chart for now, even though, we tell everybody you've got to look at the monthly first. When you're doing big picture analysis, always do the monthly first, and that's usually 80% of what you need to know about a share. Looking at the weekly chart, though, you can see there that this stock has just gone out of the blocks, but it's so volatile. Look at it.
Yeah, look at it.
And it's really got to get through that high there, that prior peak in January 2021. Once it actually gets through that with any sort of vigour, then it's more likely to take out this high. But
we bought in at 650.
Yeah.
So he's doing quite well at the moment.
96% or thereabouts.
So he's doing really, really well at the moment. So you're saying this is going to go up, or you're not sure yet?
Look, I'm not sure, just because it's gapped out of the blocks, and now we just need to wait and see what happens when the dust settles, how it unfolds over the coming weeks. But did you want to see if you can get a trend line up there under it?
Well, you probably could get a trend line up underneath this sort of stock, a rough one, so roughly sort of up there, and that's all just come back to its momentum, really.
Yeah.
So, but I wouldn't be surprised if over the next week or so it's sort of, because it's gone out of the blocks for you, just to come back a little bit on momentum, but it really needs to see whether it's got legs over the next 4 weeks to a couple of months. So, but as long as it's staying above that line, roughly that line, I'd stay with this stock.
Looks
really
interesting,
would.
doesn't it?
But thank you very much for that. That was a really good stock to have a good look at. I think we've got another person on the line. It's Ravi, is it? Are you there, Ravi?
Yes, Ravi here.
Hi, Ravi. Welcome to the show. How are you today, and where are you from?
Yeah, Perth, WA.
Perth, WA. Another one from Perth. Fantastic. I love to hear that. So, looking after yourself, mate?
Yeah, looking after good. Yeah, it's going good. And actually subscribed to your channel maybe 1 or 2 months ago now.
Yep.
And I really like your shows, you and Janine.
Oh, thank you
Thank
very
you.
much. It's really lovely of you to say that. Now, you've got a question for us today, mate?
Yeah. Actually, I got a question regarding Arafura, ARU.
ARU, yeah. And what's your question? Do you own the stock?
Yeah, actually, bought it in September and it's gone up 29.
Gotcha. You bought it in September and it's gone nuts on you. That's all really good.
Yeah, 29%. I just got your thoughts. Still hold on in it, or want to sell, or I just want your thoughts on that one, please.
Okay. Are you more medium-term trader, a longer-term, or short-term? What do you like?
Medium term.
Yep.
Medium term.
Okay.
One year maybe. Yeah. And actually, I didn't know about any stock and stuff. I think I talked with the Janine month ago, trying to do like a investment, the managed fund.
Oh, yep.
Recently, I bought your book. I was just searching your website, and I bought a book, and I thought I'd change my mind, and I think Janine also told me, why you trusting someone else? You can do yourself good.
Yep. That's what we say to people. Trust yourself.
So, you know what? I got to encourage a little bit, and I just started slowly.
No, that's what you do. You dip your toe in the water. Yeah.
Yeah.
That's perfect, Ravi. We would rather you do it yourself, but do it on knowledge. That's really what you want to do. So, but let's go and have a look at ARU for you, Ravi, and thanks for your call.
All right. We've got ARU on the chart. I was just blown away by him. I'm excited for him.
Well, he's obviously a good friend of yours. He's been chatting to you.
Look, I'm actually excited about the share that he's looking at from a longer term perspective.
Yeah.
But it's not generally the sort of thing that you could hold on to longer term.
It's more of a trading
volatility.
stock.
Yeah, the volatility.
He's looking 12 months though.
Yeah, but I'm not sure I'd even, how can you be sure that you can hold it for 12 months?
That's true.
Given the way that it unfolds. It might be about to go on a long-term trend up.
So he's doing all right. He's up 29%, he said. So obviously...
I would be staying with it if I was in this share right now. But the challenge will be is where to set the stop loss.
Where to set the stop loss.
And he needs to have a stop loss on a stock like this, because you could do your money really quickly.
Correctly.
So, as long as it keeps rising, and we need to see it get above this high here in October 2021.
Yep.
If it does that, then it's more likely to get through this high in January 2021. So that's the exciting thing about this share.
Okay.
But if it starts to fall away, I'd say it's the sort of thing that you're better off to just get out and then get back in at a later stage if it starts to fall away, and just watch that stop loss. I personally wouldn't be setting... Can you just check how far it is from the recent high to that low, the short term?
Okay, so from that...
No, from the high.
From that high?
Yeah, how far did it fall?
That's
so it's
22%.
deceiving, isn't it? Because it fell
really
22%. So from where the price is, if it takes out that low, the challenge is where is it going to go?
And correct. And I'd say it'll be a fair fall from that one. To me, that's where I would be putting my stop loss on it. If it dropped below that, I'd be getting out of it.
Yeah, I mean, if it turned around and I was watching this, I'd be thinking, well, I could always get back in if it goes back above that point. But
because he's likely to lose his 29% pretty quickly. That's what you're saying.
That's what I'm saying.
Yeah.
Yep.
Fantastic. Well, thanks, Ravi, is it Ravi? I've forgotten.
Ravi.
I did get it right, Ravi, for calling in. And thanks for the guys from Perth for calling in Adelaide. Well done. It's normally been Sydney, hasn't it?
I know, that's exciting. We're getting people from different states now.
It is. Well, before we get into tonight's topic, if you are enjoying the show, then please hit the like button now. Give us a big thumbs up so others can find it and enjoy it too. Now, later on in the show, we will give you another opportunity to call in the show and ask Janine and I one of your most burning questions. So stay tuned for this opportunity. More importantly, get ready to get your phone out and dial us when we tell you to call. Now, it is time to get into tonight's topic, which is best ASX stocks to buy under $5. Great opportunities to invest.
Now, many believe that selecting stocks on the Australian market is relatively easy, and it is, but things get a lot trickier when we add into the decision that the stocks need to have good growth potential. We also know that many feel that lower price stocks offer higher potential for growth than the largest stocks in the ASX 200. So in that vein, tonight we'll share our thoughts on a handful of stocks that have been selected under $5 within the ASX 200 with the potential to make some great gains in coming years. Dale, how many times have you had somebody say to you that they find it hard to select the stocks for their portfolio that are likely to make them money?
It's one of the hardest things that people do. People say to me, if I was in a room of 1,000 people, I'd say, who knows how to buy a share? And they all put their hand up. And I go, well, who knows how to sell? They put their hand down. But then when you start qualifying things, you go, how do you actually find the shares that are right for you that you know are going up? Because a lot of people, when they buy shares, don't have a degree of confidence in them. They're more guess. They have a little bit of a research and they guess. They might have read something, whatever else, but they do what I call the buy and pray method. They buy it and pray it goes up because they're not sure. And that's really what we're talking about here, is how to be sure that you're buying something that where you're stacking up the good things, saying, okay, I've got a confluence of things that are saying this is going to be good.
Yes.
And that's really what we're trying to talk to them about tonight, not just go, oh, that looks all right, it sounds all right. Because I often say to people, why did you buy that stock? And they go, oh, it looked pretty good at the time.
Yeah, look, one of the things that I talk to people about, even if they've come through the course and they're sort of, some people have more confidence in themselves than others. Some people see things much quicker than other people. And if you're stuck on the fence about something, just weigh up the pros and cons, write it down, don't keep it in your head. Yeah. And that way, when you look at it on paper, you can make a much clearer decision about whether to proceed or not.
Yeah, I know if I had $1 for every single person that asked me how do I buy stocks, I'd be an absolute gazillionaire. And people share with me all the time that one of their biggest challenges is selecting the right stocks to buy for their portfolio for. And for some, it's like being lost in the woods, as there are trees and paths everywhere, but only choosing the right path can get you out. And there are hundreds of stocks, but it's only when you choose the right stocks or the right ones with the right strategy or the right path that you will actually achieve the greatest success with your trading.
I put gazillionaire in the script because I wanted to see you do it, and you just did amazing.
I was going to add on to that, like with luxury yachts and helicopters and stuff like that. No? Okay.
So you've spoken to so many people over the years, as I have, about the challenges that people face. And why do you believe people find selecting the stocks as one of their top on the list? And for some, it can be a real stumbling block when trying to invest themselves.
Fear. It's fear of making the wrong decision.
Yep.
That's the biggest stumbling block. And people fear, they go, oh, I might lose money if I get into that, or if I've made the wrong choice. And it's like there's so many choices, and this is what people look at. They look at the XJO, which is the top 200 stocks, which is we're looking at, and they go, there's 200 stocks, which if I pick that one and that one goes up, but I've missed that one. And that's that fear of getting the decision wrong and fear of losing money.
Do you know what? There was someone who sent in an email recently who said that they weren't wanting to do the education because they didn't need to be, it was something like they didn't need to be a portfolio expert manager or whatever it was, they said. But I was thinking, well, people go out there and they do things that big portfolio managers do, which is look at a huge breadth of stocks,
Correct.
which the individual doesn't need to do. So the individual needs to do the opposite of what they actually think they should be doing.
But that's exactly
most of the time.
That's the exact reason why they should be doing it, of course, because they don't want to be a big portfolio manager. It's not about having a qualification to be working in the industry to manage gazillions of dollars.
No, the whole reason we did this was to actually help people to be independent and free them from that thinking. So I hope people haven't got that, mistakenly misunderstood what our intention is there in supporting you to do that. Getting back to it, we chose stocks under $5 for tonight's discussion, as there are still many great companies under this price without us having to even get into the dregs at the bottom. So remember, many of the biggest and best companies on the market today were once trading below $5 at some stage. So how do investors find winning stocks?
That's a good question, isn't it? Well, first and foremost, it's most critical to your long-term success that you learn how to select the right stocks. And this means you understand how to apply solid rules and you have a well thought out process so that you select the right stocks to suit your goals.
Generally speaking, stocks under $5 are more for investors who can tolerate greater risks, as they'll have a wide range of risks attached from low to high. Tonight, to narrow this risk, we set a limit on the lower price level that we would accept. So for tonight, all stocks had to be trading above $1. As underneath that, risk levels can be quite high due to the low liquidity that often company stocks priced below this level at experience, because they can be quite volatile, can't they?
Yeah, and a lot of people don't understand that liquidity is really, really important. Now, there's still left a lot of stocks, a hell of a lot of stocks. So to narrow down the selection again further, we look for two things that would increase our chances of finding the stocks with the best chance of achieving growth in the short to medium term. And the first one was to include stocks that were trending up or that appeared to have bottomed, and the second one was to include stocks that were trading or had a trading value of greater than $3 million. So they need to be over $1 and be trading at $3 million. So when you added up how many trades were happening by the share price, that added up to $3 million.
For that week.
Correct.
Yeah, so we could have had about 2 dozen stocks on the list tonight. In fact, there were about 400 that came up in my search. And I would have liked to go through them all, but I probably would have been kicked off. We would be here all night to get through all of that. So, I couldn't do that.
They would have turned the lights off on you, I tell you that.
and I'd love the challenge to be able to do it, but the producer probably would have shot me out of here. I narrowed the list down to 5, by the way.
That would have been damn hard for you,
just to get out of here tonight.
Well, it is really great to hear, and as whilst I love doing this show with you, I'd love to spend some time with my wife before I curl up in bed.
Well, that's important.
But I also know you do love the charts, so let's get into the charts for these 5 stocks under $5 with potential for growth. So,
all right, we don't want to go too crazy, do we, here?
No.
Look, I found this little stock and I've never actually looked at it before. So when I was going through this list, and bear in mind that most of the stocks that I look at, because I'm focusing on what we're doing for direct equity, is we look at the top 100 predominantly.
Correct. We
and
don't
sometimes we look outside it, but not very often anyway. But down this far, so we're looking at a stock that is trading between $3 and $4 over the past year or 6 months or so, and it's come off a long-term low potentially. Now it could go
nice.
Yeah, it could go lower, right? That's the risk with something that's been going down for so long. And it did take out, if we look at the left-hand side, you can see it did take out that all-time low. Now, I haven't verified fundamentals on any of these, so I haven't done that research yet. Yeah, I'm still looking technically at the chart. So this looks like it's fallen away and it's now looking like it's trying to find some support. So it's not, in a nice uptrend yet, but it is providing some indication that it's coming off a low. And I thought that looked quite good. What do you think?
No, I love it. I think it looks really, really good. And this is probably the challenge that people have is when they're looking at stocks. They're like kids in a lolly shop. They're trying to select all the different types, where what we've shown them to do, or what you've talked about, is let's narrow it down to a smaller number.
Yeah, and it doesn't have to be the process we've talked about, because I've just tried to dumb it down into something that's so simple to do, but there is even more that can be put into this. So I got 400 stocks in the search, but I could have put more filters in there to eliminate a lot of other rubbish that was in there. You just couldn't believe some of the rubbish that I was looking at on the charts and the way these stocks were unfolding. But the ones that stood out, and just by cycling through the charts, often this is a good way of identifying the ones that are more likely to go up.
Yeah, so let's bring up the next stock. So some of the extra filters you could have put in could have been EPS, PE, dividend yields.
The
to
market,
filter down.
I could have decided, just only look at certain stocks with a market cap of greater than a certain amount. That would have helped filter out some. Abacus Property Group. Now, I was thinking that some of these property stocks, I'm not saying that these stocks are buys right now. So the last one we looked at, I wouldn't be buying that at this point right now.
I wouldn't be too far away if it kept going up.
Yeah, it's getting close. Now, this one is in a nice uptrend. It looks like it has the potential to take out these prior highs, but of course there is some resistance up here. So it might have another, could be 10% upside, could be a bit more. It might find resistance there and turn back, but it could keep going. So it's in a nice trend. A trend line would protect it. Yeah, I think that looks interesting as well. So something from the property space. And then this was an interesting one, I thought.
De Grey Mining, wow.
De Grey Mining. I thought, yeah, this is just doing something a bit different. Now, it looks like it's broken out of a whole lot of resistance that occurred back here. It could be a backdoor listing, I don't know, but it doesn't appear to be.
Doesn't appear to be, does it? No.
No, and it's heading towards, it's above $1, which is great. That's what we were looking for. And it's heading towards that $2 mark. So I thought, well, okay, once it starts to move back up, we've got to get a proper buy signal. It doesn't have that at this stage. I would think that this could go on and do something really nice over the medium term if it keeps going up. If it starts to fall away back towards that low, of course, we've got to look at the downside. Then the risk is there for it could fall. So
and you've got
just
to look at all the volume through here since it took off. From February last year. A lot more volume in here now than what it was prior to that. So this thing will trend better right now as long as the volume levels keep up.
But it's only if it keeps going up and, like you say, the volumes keep up on it, that then it's good. If it falls away, then we just take it off the list. It's that simple.
Correct. But it's looking good right now. What's the next stock we've got?
Okay. So we're looking at Air New Zealand, believe it or not.
I haven't looked at that for a while, and I do like this company.
Yeah, so a lot of so Qantas has taken off. We had Flight Centre take off.
Yep.
Air New Zealand hasn't moved on as much as what I thought it would just yet, but it looks like it could be setting up there a sideways move really on the monthly chart.
Yep.
It's really struggled to get through this level. Now $2 or $1.90 could be a bit of a stumbling block for it.
But look at the volumes after the COVID low.
I know, but I think, if it gets going over the next couple of weeks and makes a really nice strong move above this high here in March 2021, it's more likely to keep going from that point. So
I think it's going to go back.
That looks interesting. Now, how are we going for time? Because I've got an extra one on there.
One of my favourite stocks.
Costa Group. I know. I thought you'd be happy about that.
And I didn't even influence you.
No, and it hasn't actually confirmed the bottom yet. Remember, we had some people not call us, but email in about this one a couple of times. Well, I thought, okay, I like it too. And I thought, if this bottom's here, I was just thinking about COVID, coming out of COVID, what could be the stocks that could benefit. The downside risk is still there, though.
There's still a bit more downside risk on this.
So I'm not saying it's a buy now, definitely wouldn't. But, we just need to see it go up for a few weeks and head up strongly. And then if it manages to do that, it could end up taking out this high down the track. We just need to see it turn around, though. It's too early.
So this is Janine's
Group?
KFC group, the 5 for $5.
I didn't think we were going to mention that. That was a joke.
5 for $5.
No.
Okay, so you've got 6 for $5.
That's going to fall flat.
Okay, go for number 6.
Okay, SDA Health. Okay, I mean, look, you've always got to have a healthcare stock in there somewhere, and I don't really like the short-term action that I've seen over the past couple of months. But if that settles down, and what this has done, it's actually provided a line in the sand, because I'm not interested in the stock unless it gets above 260 or thereabouts, these highs here. If it gets above there, I think this stock could take off more medium term, could head up towards the 360 mark, 380 even. But you've got to be patient and wait, like the lion or the tiger waiting to pounce on its prey. That's how you've got to think about these sort of shares.
But to me, if it goes through that level, because we've seen some big moves here and a big move there, if it goes through that high there, that 275, this would be in my watch list. Not right now, but I'd actually look at buying that.
Well, usually you're more the cowboy than I'm the cowgirl, but I'd be saying I'm interested in it once it goes through the September 2021.
So you've been much more of a cowgirl than my cowboyish. But again, we're both on the same thing there, because that would prove it's now starting to move up in a more medium-term trend.
Yeah, and look, a lot of people think you can't find stocks at the moment, but that's not true when you go looking.
No, it's just you're not looking in the right stocks, or you're not looking in the right way. And I know, in bull markets, I've had traders say to me, geez, I can't find enough money to trade all the stocks I can find, and the next phone call will be, I can't find any stocks to buy for the money I've got. And it's the same in a bear market, so it's about how you're looking at the market. So to me, what you've produced is a real nice array of different stocks, some that are probably more close to buying and some a little bit later on, but I love what you're looking at there. So, but just to sum things up for everybody, remember, if you are selecting a few companies for your portfolio that are trading at low prices, make sure you have a set of criteria to make the selection rather than a guess. Otherwise, you end up with a good buy rather than a good buy. Or you do what I call, or most people do what I called a little bit earlier, the buy and pray method. Now, it's critical to your success that you know how to buy and sell with solid rules and understand how to read the trends. Now, remember, the trend is your friend. So anyway, that's it for our topic for tonight. Now we'll get back into our next email, our first email after the break. So I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. Now it's time to pick up your phone and get dialing. Remember, the number you need to dial is 0392909988. Now while you call us, we'll get into answering the next email. So call now.
Okay, our next email is from George. Hi Dale, Janine and legendary team. Oh, they will love you.
Yeah.
CDA popped back onto my radar again after exiting it in late June and just waiting for a solid week or two above 1330. I like that it turned around on its October 2020 and February 2020 levels, but as we've seen in many cases, history's a double-edged sword, double-edged knife, and could still fall away. Falling knife, your thoughts and appraisal on it would be most appreciated. And another chance to learn. Thanks, George. Great email. Thanks a lot, George. We really enjoy your humour. So looking at Codan Limited, you can
we
see
looked at
there.
it a little while ago.
Yeah, there's a real resistance level there at around that 1330 level. So I can really understand what he's saying there about waiting for that level. And I agree. But look at the pullback that this stock has just had. Let's just examine it. We'll go to the monthly chart just to, for a minute.
39%.
Almost 40% fall. So does that mean the fall's over, or is there a risk to the downside still?
Well, it's possible there's more downside to come. At 39%, it's almost sort of in the middle of something, isn't it, really?
Isn't it?
So it's not necessarily, you don't often see stocks fall 39%. You see them fall 30% or you say 50%. This is stuck in the middle at the moment. So, geez, I'm 50-50. I think it might find a bit of resistance. It's finding resistance through here, and as you can see that.
It would need to turn around pretty quick, like in the next week or two, to actually get back above that level.
Let's have a look at really big there. Look at open, close, open, close, open, close, open, close. Nowhere near that line. There, it's trying to push up and come right back. Try to push up, come back. And this week it's only 2 days.
Yep.
So right now I think it's probably going to go, it'll probably end up going through that low of $11.74 and head down. But you know, if it does do that, it's probably going to come down to around about $10 mark, I'd say. Maybe even a little bit below that sort of stuff. So, but yeah, probably not much good news for.
But a great level. I was really excited by the fact that he's identified that level and
I think
a
it's
line in the
fantastic.
sand as to, you know, not just to jump in now because he might be interested in the stock, but waiting for a better time.
Too many people do that, don't they? They sort of see this stock and they have this resistance level.
Or they hear about it or something and then think, I'm just going to buy
And
it.
they buy in and then it reverses and goes the other way on them. All right, well, let's move on to the next question. The next email is from Des, who says, Dear Dale and Janine, just a quick question. Is buy the dip the singularly worst piece of financial advice in history? Regards, Des. Strong words from Des.
I think he's really passionate about it at the moment.
Buy the. How many times do you hear people go, I just buy the dips or just buy the dips?
Yeah.
What does it mean?
What it means is that, because after there's been an initial rush in the stock and it rises, then there's a breather. So there's this point where the buyers and the sellers are reaching equilibrium, and it may just be a rest point before the next move back up. So that's where you buy the dip. Okay, so the sellers have actually taken control temporarily, you get in at a cheaper price, but your actual overall view is that the stock is likely to continue to move up. And it can be a way of building up a position in a holding that you've already got.
Okay, so next question is, are all dips equal?
No, definitely not, because the dips that we're talking about, the ones that are safer, generally tend to be the shallower ones, where the stock's going sideways or more or less, not the ones that are nice and almost a quick, sharp sell-off. Very rarely do you see those quick, sharp sell-offs and then a straight rebound out of that. You know, it's more or less that you'll get another move down after those sharp selling periods. So that's my view on it.
And one more question. I got one more question. You always come in threes, remember?
Okay.
The next one is, when is a dip not a dip?
When is a dip not a dip?
Yeah, it's not a joke. It's when is a dip not a dip?
A dip is not a dip when they're actually going to keep selling it.
Correct. Yeah. So that's why he's coming up saying, or Des is saying, you know, is that the worst piece of advice? In a bull market, if you get an easing off, that's fine. That's a bit of a
He
dip.
could watch the volume and just have a look, just to get a bit of experience on the difference, is go and have a look at the volume histogram on the bottom of a chart, which we often show when we're looking at our charts, and see what happens to the volume in certain dips and what happens on those big sell-offs when it's not really a dip, it's just a big sell-off and it's part of a decline.
Yeah. I don't think it's the worst piece of financial advice ever, but I think it's one of the bad ones.
Yep.
I don't necessarily agree with it because most people won't understand when to buy and when to.
But it's not just about when; it's also about how do they know how to position themselves.
Correct.
What have the advisors done in terms of looking at the money management for the individual to make sure that they don't then make their portfolio completely out of whack by buying more in the dip?
Yeah, I totally agree. Now we've got another caller on the line. It's somebody called Mac. Are you met there, mate?
That's correct. That's me.
Mac, you've called in before, haven't you?
I'm from the Gold Coast and I did call in before, yes.
Fantastic. Another good-looking fella too, I believe.
I hope so.
Cool. You got a question for us today, Mac?
Yes, the question is about Sol Patterson, S-O-L.
Yeah, do you own the stock at the moment, mate?
I do. I have 500 of them.
Okay, and what sort of price did you pay for them, do you remember?
A little above what it is at the moment. My average was about $36.
Okay, cool. And you got medium term, long term, short term?
Short to medium.
Short to medium. Okay, I'll get Janine to have a good look at it now. You got any?
Now, I mean, you would actually be in love with this share, wouldn't you?
Probably.
Because it trends so beautifully.
It's magic, isn't it?
It is. And so, look, just to get your trend line up underneath it, I just want to grab that before we answer the question that's been asked. I'm just playing around with the tool here.
That's fine. I'm sure Mac's not going to worry about that. This is perfect. Look at that.
Okay, so we're just looking at that beautiful trend up there. Now, it has come back quite strongly. Sometimes when stocks accelerate away from the angle of the trend, they just get a bit shy, and then it comes, you know, the sellers all of a sudden come in and see it as an opportunity to short. Yep. That could be corresponding to some news. So first of all, when a stock pulls back like that, I'd be doing the research to find out why. Has it pulled back? Has it gone ex-dividend? Has there been an announcement that's materially affecting the share price? And then try to understand that by doing your research around that. Then have the rule on there, like we've got a trend line in place to protect it. At the moment, it's fallen 16.6%, which, you know, for a stock like this, it's not out of the ordinary. Go back and have a look at some of the previous falls that it's had. It could be in, you know, similar sort of degree. There you go. Dale's got one there. What's that? 14% decline.
14 is a bit
that
less.
one's a smaller one.
It's about 8.
And often when there's a sell-off like this, we were talking about buy the dips before, we get that initial sell-off, the stock will then push back up because the sellers decide to get out, the short sellers just to take their profit, and then the buyers come back in thinking it's cheap. Whether it is or not is only determined by what happens in the weeks that follow. So that's what you just have to continue to watch to see whether it does break the angle of that trend or not, really.
Yeah, as long as it's above that trend, I'd be quite happy to hang on to it. As soon as it starts moving below this grey line, then I'd start to look at whether I would exit that stock.
Yeah, it's all about the risk management, isn't it? It's good that you're looking at this. I think, did he say his average price was $36?
Yeah, something like that. Yeah, it's about 76.
Okay, so he's in a slight loss at the moment, but not a great loss.
Not a great loss, just slightly below where it currently is, which is pretty good. So if you have a question like for us, like Mac, give us a call, 92909988. We'd love to have you on the line. So we've got something else now?
Now we have a question from... It's James. Okay, we've got an email from James. Hi, Dale and Janine. I'm a new subscriber and like your shows. Can you please let us know what the relationship is between long-term bonds, interest rates and technology stocks? Why technology stocks fall when interest rates rise? Thank you, James.
If we told him, we'd have to kill him, wouldn't we?
It's a whole complex combination of reasons why. Is that something that you are going to get into tonight?
Give me the tough question. No, it's pretty simple. It's basically most of the money traded on the market is by the big end of town. I'm talking about 75% of the money. So worldwide, money is moving around the world all the time. And what they're doing is looking for the best return at the lowest possible risk. And so if they can have a risk-free rate of return that's higher than being in a stock, they'll go to cash. So that's what happens when interest rates rise. In a country, let's say Australia's interest rate rose by 1%, it would attract more offshore money. So that may come out of a stock market, it may come out of certain sectors. It's not just the technology sector. I think you're probably maybe not looking at all sectors. Money will come out of multiple different sectors. So what the big end of town are looking for is having lower risk and getting good return. So if the US dollar goes up, it'll affect the market. If the US interest rates go up, it affects the market if they come down. So the bond rates are how the government either puts money into an economy or takes it out. So if a federal government like the US or Australian federal government are buying bonds, what they're actually doing, buying bonds back like the US is doing at the moment, it's pushing money into their economy because it's pushing cash out to get the bonds in, and they hope spending happens, which then goes into the stock market and pushes the stock market up. But when the US stops doing the bond buyback program, or they sell bonds, what they're trying to do is take money out of the market and slow it down. And obviously that would slow the stock market down. Do you want to add any more to that?
No, I think that's great.
Do I
Fantastic.
cover it?
Yep.
Do I get a gold star and an elephant stamp?
I don't think you need one.
Okay, I don't need one.
Goes without saying. Okay, now we have a caller on the line. We have Peter with us tonight. So Peter, would you mind telling us where you're from, please?
Good evening, Dale and Janine. I'm from Sydney.
Oh, fantastic, Peter. And what's your question for us tonight?
I have got a question about Telstra. I do own the stock for a couple of years now, and I kept adding to it as it was growing nicely, and recently it slowed down, so I'm just actually curious what your thoughts are.
Lovely, and good stock choice too. What made you choose Telstra, would you mind me asking?
Well, it's solid. It's not going to go bankrupt. They pay good dividends. It's a stable choice, and I'm not into any make money quick sort of scheme or anything like that. I thought it's probably a safe choice. It was quite cheap, actually.
And are you a long-term investor or short to medium term?
I actually choose both, but majority it would be actually long term.
Okay, Peter. Great. Thanks. Fantastic question and really interesting stock. So let's take a look at Telstra. So Telstra on the screen there. Oh, geez, you're so efficient, aren't you? You're a great assistant.
I'll put my tutu on and dance, but I've got to...
Did I forget to tell you?
I've got to put too much weight with the COVID lockdowns, and I'm now a 4-4 instead of a 2-2.
4-4. Okay, so Telstra...
Enough of my jokes.
Yeah, that's great. Telstra, okay, so it's in a nice uptrend, and we do have a trend line. I'm going to let you do it.
No, you can do it.
You get so excited about drawing the trend lines on there. All right.
You need to practice.
He's pointing to me to do it, so I can't even see them.
You need glasses too.
Oh, okay, so we're looking up here. It looks like we have a really nice trend up there. And it may be that Telstra's below the line at the moment, but is it going to continue to go down, or is it going to find support and go back up? Well, in the short term, we're looking at the monthly chart, we can see that the trend really hasn't changed just yet. It's still sideways at the moment, the last 3 months. So we just continue to watch Telstra. But at the moment, it's more or less, if you're long term, would you still be in that?
Well, that's the thing. If you're a long-term player, this thing's long-term bullish in my view. And I'm talking 10 years. That's what I'm talking about with this stock. If you're looking at short-term, under 3 months, then it might have a bit more downside at the moment. Because around that $4 level, if you have a look at the monthly chart, and let's just squash it right up, you can see the whole history of Telstra. So it hasn't been a long-term buy and hold stock, although people have been doing it for, holding it all the way through here. But in such was a 10-year downtrend, I think this is going to be a really nice long uptrend. So if you're holding it for 10 years, I think you'd be really well placed. But, that level there, there's some resistance around that from a multiple different places.
I thought that Telstra would actually turn and go back through that level.
Yeah.
It hasn't done it yet, so it might need to soften off a little bit first before it does it. But I agree with you, long term,
think
It's a great choice, yeah.
I think I really do like it long term, and he had all the right reasons I think for owning it. You know, that he was long term, great stock, not going to go broke. You wouldn't think Telstra would go broke.
Dividends.
It pays a really good dividend. It's stable. It's not going to be a racehorse out of the block. It's not going to give you nightmares or make you feel, end up wake up in shivers, in a sweat, worrying about your money. And if it goes down, I think its bad days are over. It's
Actually,
cleaned out all the crap.
I think it has actually created a cold sweat for some, or a hot sweat, whatever you want to call it, for some people when the GFC hit, because there were people that we knew that had told us that their advisors had told them to put all their money in Telstra.
I know, and it kept going down and down and down and down and down. This was my dog stock for 10 years and I loved to hate it, but now I love it. I think it's a great stock for long term. Again, not short term, for long term, so I think you've done really well for that. The next question we got is from Rashmi. So Rashmi says, hello, Dale and Janine. My question today is about AusNet, which is currently a takeover target by two separate entities and looks like it will be a long, drawn-out process with all the necessary regulatory requirements and approvals. Now, he says, I purchased these shares earlier in this year around $1.80 and currently have a decent profit. Is it worth continuing to hold the shares, or should I just take profit and invest elsewhere? Thanks again, Rashmi. Oh, good question.
Great question.
And really
look, generally, once the board's made a decision and has accepted the offers, we generally just go, take our money and run, basically. Some people, look at the actual offer and see whether there's a sweetener in it for holding on. Sometimes there can be. But if there isn't, then why would you continue to hold? Sometimes there can be a bit of arbitrage going on with the share price, and it can be just hanging around lower than the actual offer price. But you don't want to be greedy in these situations.
Well, if there's two companies bidding for it, so let's have a look at the chart. So let's go and have a look at the chart. If there's two companies bidding for it.
So you want to look at them, you can see the monthly on the left there.
Yeah, so obviously there's been the bid and it's up around $2.50. So if obviously one company's made a bid and they're if there's two companies, that means the second company, they may be wanting the other company come in with a higher bid.
Yeah, so what you're saying is they might come back again, so wait for that. Yep.
So based on history, when we've seen that sort of stuff happen, let's say the bid was $2.50, for example, where it is now, how much higher would another bid be? Is it likely to be 5%, 10%, 30%, 50% higher than what the other company?
Look, historically it's not a lot.
It's cool. That's what I was thinking of it. So this is what the decision you've got to make, mate, is really about where your profit is. Obviously, you're making good money. You bought into $1.80. You've got to say, well, am I going to hang on for another bid? Because one of these companies would buy it, would you think, wouldn't you?
Look, generally it doesn't take too long for these companies to get themselves sorted and come back and decide, because they have to get on with business.
Well, they've got to do the due diligence and everything else.
Which, they will already have done that before they've actually put their first offer in. So they'll know where they're prepared to go. It's just, usually it's a matter of months, a month or whatever, weeks before they come back and make another offer. Yeah,
I'm with you. As Janine said, we generally get out of these stocks. Once the board said, yeah, we're happy with that, we generally get out of them pretty well because they can take a while to wash out, and you're better off having your money going somewhere else. You take your profit and run and put it into another stock. But thank you very much, Rashmi, for asking the question, and it really was appreciated you taking the time to do that, and with all our phone callers too. There've been some great callers, haven't they?
Oh, excellent.
I've been really. But that is our thoughts on AST for Rashmi, and it is, as I said, so go and have a look at AusNet, and probably a good time to study this sort of stuff if you're not used to seeing takeovers and bids and everything. Just watch what's happening.
Okay, if you called into the show and missed out this week, then keep trying, as we'd love to chat with you. Just make sure that you write down your question and be back here watching the show next week, as you'll get another opportunity to call in when we give you the cue.
I think I'm going to get my mobile phone next week and call into the show and ask you a question. What do you reckon? Okay. All right, okay. Well, remember, the best way to have your question answered is to call between 7 and 8 p.m. every Tuesday. Otherwise, you can email a question right now to info@wealthwithin.com.au. And remember to include Wealth Within Live in the subject line. Now, also, remember, in order to show your appreciation for us helping you by answering all of your questions and educating you, all we ask is that you subscribe to our channel first, and then send an email in, and also give us a big thumbs up in the like section, so you can do that right now.
Well, that is it for tonight's show. We hope you not only enjoyed what we presented, but also received great value for our answers to your questions.
All right, now remember to put this show into your calendar to join us here right on the live Australian Stock Market Show, which is on every Tuesday, 7 to 8 p.m.
As always, thank you for joining us, and we hope that you've had a great week. We look forward to joining you again next week. Goodbye, good luck, and good trading.